Welcome back. You're watching Stockwatch with me, Simon Brown. Join me to take the stock-related questions tonight. David Shapiro from Sasfin Securities and Mutooni from Sanlam Investments. Please be sure to send your questions on email, stockwatch@bdtv.co.za, SMS 41392, or on X using hashtag Stockwatch. Gents, thanks for joining us today. David, let's start with you. American media is calling the election. Trump has won. Have you been frantically changing your portfolio today, or is it, markets tend to go up?
No, it's just favored it, for the wrong reasons. I mean, everything there is just screaming higher. I mean, to a point where the S&P will probably be at new record highs now. Tech shares, in fact, also the Russell 2000 is the one that's benefiting the most. So I just think, Simon, whichever way you think, because I've been obsessed with it, and I'm a little still, kind of sitting here quite dumbly, just say, how do we handle it? From a market point of view, it's rock and roll, and I think that we're going to go into very good markets. If Trump takes all three houses or three pillars and gets whatever he wants to through, what it means in the long term, I'm not sure. But in the meantime, if you're offshore in the American markets, it's rock and roll. So, yeah.
Roy, that's it. I was going back and looking at different presidential terms over the many years, and we like to talk politics, and truthfully, markets seem to go up almost regardless.
No, absolutely. Look, equity markets go up over time, over the long term, and I guess that's where we're in them. I think the spark of a Trump presidency, people look back to what they expected the previous time, although the caution is, the previous time it started off a much lower base. Yeah. But the pure concept of lower taxes, a bit of a stimulatory fiscal policies, and also on the tech side, plus Bitcoin and all of these liquidity-driven assets seems to be at the back of people's minds. So like David said, the basis here is buy equities, and this should be good for markets over the short to medium term. Longer term is another question altogether, and we can chat about that. But I'm with David there, absolutely.
Yeah, and I take your point. I think Bitcoin all-time highs earlier this morning. Roy, let's stay with you. We had a Pepcore trading update this morning. What did you make of the update? What do you think of Pepcore? I mean, it's kind of lagged some of the other retailers, sort of clothing retailers in South Africa. What did you make of that update?
So it felt like it was a little bit ahead of expectations, but there was that impairment, which it's not quite clear what that was about. And I think that could have spooked the market a little bit. I think just remember with Pepcore, they've got that Brazilian side of things, which could potentially become something really big. And then also domestically with two ports and lower interest rates potentially, that could actually light a bit of a fire under them. So I like Pepcore. I think of the retailers, they're nicely positioned. They've restructured themselves well. They need to fix up that Ackerman side of the business. But it's one that I actually like, and I think over the long term will do well for you.
David, I mean, as I said, the Truers, Fashini Group, Mr. Price all had a great year. Pepcore lagging. There's an opportunity there, because I agree with Roy. There were no red flags in that update.
No, I've always liked the company, for years, simply because of where they focus at the low end of the market, but always quality stuff down there. Roy mentioned the impairment. I'm not quite sure where it was. It's quite big, but I think a lot of businesses are kind of writing off stuff and repositioning their balance sheet to reflect what should be the real asset values, on which they can make decent returns. I think that's normal, but I like Pepcore, and I think exactly for the reasons Roy mentioned, the Brazilian local operation as well. Money's going to be here. Rates are going to come down. People will have a little more money. I think they're okay. It's I think we're going into. I like the apparel retailers, strangely enough. Yeah. I think they got an edge now on the food retailers. Yeah.
Well, and we've been too broke to buy clothes for years. We're out there having to upgrade our kit, and we're all at Mr. Price, trust me, in Pepcore. We're not going to the fancy Woolies. David, let's stay with you. Capitec, question came through. Yeah. What was Mr. Leroux doing in that sense statement? As I understand, it was a zero-cost collar, but it's sitting in a separate entity. But the other question coming through, Capitec at above 3,000 Rand, is it still worth buying?
Yes. because we always say it's too expensive and it just keeps getting more expensive. They're a good operation. And I think one of the most exciting local finance groups, where other banks are dead scared to lend, this one's not. And I like I really like what they've done with the group. And I think one of the biggest regrets I have is that always, oh no, too expensive, too expensive. And don't worry about those zero cost collars. I think, sometimes CEOs and executives are also allowed to do kind of structures and that release money. Don't worry about that. Somewhere along the line, they will pay the piper. But I mean, for the meantime, it's in their favor. Yeah, I like Capitec, yeah.
Roy, David makes a point. There's some stocks. I'd throw Clicks into it. I'd probably throw ShopRite into it. They're never going to be cheap. If you're waiting for them on cheap PEs, you're going to die waiting. Capitec, I mean, is it still worth putting in a portfolio at this 3,200 and change?
So it's nosebleed level, but I think you have to think of it slightly differently. I mean, if you think of them as a bank in the mold of Standard Bank, ABSA, all of those, it's ridiculously expensive, 7 times price to book and everything. But then I think if you just go a little bit below and look at the numbers and split it, most of these banks have a very significant portion of their book being lending, and a small portion being fees or non-interest income, and they want to grow that. I mean, Capitec has over 50% of its revenue being that non-capital intensive, non-interest revenue, which is fantastic. It means they don't have to hold back capital, and they can keep throwing other things at their customers, and their customers are a captive audience who want cell phones, they want pretty much everything. So the leverage there to the upside is significant. I think they're more a platform business than a bank, and that allows you to open up from a valuation perspective. When you look out, they execute incredibly well. Their returns are incredibly high. I see no reason why you should be betting against them. They haven't put a foot wrong in a long time.
Yeah, Roy, I'm not so, I don't go to those kind of levels of investigation. I go to Santon, Simon, and I see what the queue is outside the ATM at Capitec, and then I look at Standard and FirstRand, and there's always a long queue at the Capitec ATM. So, it just shows you the customers love them.
And that's why I can't bank at Capitec, because I can't stand in those queues. I haven't got enough time. I'm too old to stand in long queues. David, what about Quilter? We've chatted about it before.
Yeah.
Your take on it? Is the opportunity
I never
here?
know where to put it. We never looked at it in great detail because it's always been something that Old Mutual held and so on. I watch it from a distance, I must admit. And lately, the numbers have been getting slightly better, increasing assets under management and that. But I haven't got a great intellectual take on it. Overall, I think I'll give you a longer take. If we start to see improvement in markets, if markets keep going up, then like any other asset manager or like Sanlam, like Roy, he's going to get a lot richer because he's going to sell a lot more investment products and that. So I think good markets will favor them. So, but I've never really got into looking at Quilter. Yeah.
Roy, have you had deep dive in Quilter and got thoughts?
Yeah, no, so Quilter is what the future of asset management is. So it's right now, when you think of an asset manager, you think of Coronation, some really clever guys sitting down, picking stocks and filling them in the unit trust. Quilter has specialist sales force, sells products, and in the UK, they're nicely positioned because there's that whole thing about pension freedoms where you're responsible for your contributions to your pension fund, how you manage it, and all of that. And that puts them in a fantastic position. That community, that country is seeing aging, more people having to manage their money. So I think over time, that's definitely one to look at. It's not your high beta stock. It's never going to double earnings in 5 minutes, but it's an interesting look. And from a South African perspective, a solid rand hedge.
Roy, let's stay with you. Question coming through around EOH. Bought at R3.37. Is it ever going to get back there? I mean, EOH, Stephen van Collier did his 5 years, exited, but even the last set of results still coming with a loss.
It just looks, these IT businesses, you have to be very careful. I think for a long time, We're very reliant on government business and connections and that sort of thing. And it's just never been able to clear up. I mean, I saw the CFO, the new CFO who's come in, cutting costs and everything. Yeah, it's hard. It's hard. Once your reputation is gone, it's gone. I think you must disconnect from the original price and look at the market as it stands right now, where their top line can go, where their margins can go. And I think it's a completely different business, completely. And that's what the investor must be looking at. Is it worthwhile to take a bet on something changing here, or get your money out and go into some more predictable place, some more things where you have higher confidence of share price appreciation or dividends?
David, that's part of the problem with UH, as Roy said there, is, I mean, they're selling almost a commoditized product. I don't need to go with the UH.
I looked at Eltron's numbers, which were knockout numbers. I think we've lost touch with Eltron because they've completely redirected their operations. Whenever I used to think of Eltron, I know they unbundled Bytes and that, which was a superb operation. But I always thought of them as someone who sells engineering products or cables and everything. They're a tech company providing health tech, fintech, also car tech.
Netstar.
Netstar, which is like car tracker and doing very well. Suddenly you've got a really nice IT business. So why risk your money on ELH? Switch. There are some businesses around. Even Reunert as well has changed the direction from where it used to be in that. So there's some very good operations. Rather than play the turnaround, rather go for the winners, And I was impressed with Eltron, impressed with management.
Yeah.
How it's also adapting to quietly to what's happening in the country and producing very good products.
Roy, you agreed quickly before break on the Eltron assessment. Those were good numbers.
No, absolutely. That's going to be my stock pick at the end of the program.
Then leave it there. David, let's go to you. A question coming through about sort of niche commodities, copper and uranium. There's some ETFs out there. Are either of those on your radar and getting you excited? Copper, uranium?
I just worry about all of this. We're all searching for the bottom. And I don't know if you picked up the story with one of the biggest cobalt manufacturers today, producers, who's complaining that the demand for all those fancy metals is not following through because of the fallout in demand for EVs. So, all those areas that we're looking for, copper is also associated with EVs, with electric vehicles and so on. So I want the market to find a bottom. I want things to happen. But it's taking longer than we thought. And I think a lot of it is around where China is. So, copper's off its bottom. It was below 9,000 a ton. It's 9.5 now, etc. But we need massive growth. We need China to turn up. We need Europe to pick up as well. And also things to happen in America for those commodity prices to pick up. Uranium. My whole life I've lost money on uranium. I'm not going to change my line now.
Roy, do you have my problem always with commodities? I mean, you were speaking a moment ago around EOH, for example, and management who can manage and the like. The problem with copper is I always I feel so out of control with it. Like what's driving the price? Yeah. Have you got any further insights? Copper, uranium, do either of them get you excited?
So the thing is, thematic, that's exactly it. It's a theme, right? And like David says, it's all about the just energy transition, and we'll need far more copper than we've ever dug out. That's what people are investing in. But you can see the demand is not coming through as fast as people expect. The costs are rising. It's very difficult to match costs with supply and demand over time. So I tend to stay away from these things. I think there's people far cleverer than me who know exactly what's going on underground, figuring all of that. Like David, uranium has never been my friend. And I think copper is the same thing. I would rather play it in a commodity company where it's nicely diversified, they pay a dividend, and some clever guy's the CEO and he's going to oversee all of those issues.
I take your point, absolutely, and then we can get the leverage and everything else. So Rolex, stay with you. Question was coming through around Anglo-American versus BHP. I suppose we could throw Glencore in there. Your diversified miners on the JSE, which would be a topic for you?
So I think Anglo's is a special sit right now because you don't know where it's going. Either current management will restructure it or it will get bought out and broken up. So it's quite clear you're basically, there's a time value there. You have to seriously think about whether you want the platinum and all of that. Okay, BHP looks like a very professionally run business and everything, but remember, they're the most likely bidder for Anglo. So there's a special situation there. I just like Glencore. Glencore seem to do well from a trading perspective. They're in good commodities. They know how to hedge themselves when it's mining or it's trading. That's the one where I would be a lot more comfortable with. If you're happy with special situations, I guess Anglo would be where you're going because in all likelihood it would be acquired or management will win and the restructuring works out.
David, diversified miner for you?
Watch Anglo's. Mark Henry's there. He's coming back for this company. You know, he might have been pushed aside for 6 months, but I don't think he's going to let it go. And Anglo's, I think they've got lots of issues, Simon, still. You know, things are not really going their way. I think the diamond side as well, that diamond market has collapsed. Now, I don't know if you picked up Murray and Roberts where they put Nisha on hold. You know, it's indicative of what's happening in India. So they've got that side of it. You know, as we're talking about copper not coming, where they're going to find the money to do so. Platinum, bumbling along, picking up off a very low base. I think, I think Mark's just circling now like a vulture and is going to come swooping in again. So from that point of view, you might get the buyout. But I'm with Roy on Glencore. They are a trading business. You know, they're hard traders, and they tend to read the market pretty well.
Yeah,
but
that Murray Roberts,
a lot of work still to do there. Yeah, in all the miners, it's not clear. You know, there's not a clear path ahead.
Yeah, and Murray Roberts with the Anglo or De Beers has come to them and said we're going to be care and maintaining some of our diamond, which Roy, as you said, that the diamond is not doing great. We had another question around construction. Avenge. I mean, David, I think it was last night we were chatting perhaps at the Sasfin event, talking around that we used to have a really big construction sector in our market. We don't anymore. Many of those that are still left don't do much in South Africa. Would Avenge be on your list?
Well, it's no longer a South African company. No. I think they're even producing their results in hey? They're doing it in Australian dollars. So you're buying an Australian construction company, not a very big one either. It's too much risk, Sam. You know, there's once more, in South Africa, we're not seeing the spend. And you can pick that up from the cement industry and that, where they're battling. So it's also one of these areas where, as Roy said earlier on, you don't have to go there. You know, there's plenty of other places to go where you can make money. You don't have to be the one who picks up the bottom. It's I think it's tough, even for Avenge.
Roy, is construction a space you're staying away from? Has Avenge got potential?
Look, in construction, I would stick with a couple of guys who survived, Roberts and Wilson Bailey. They seem to be the only big civil engineers here. They're doing South African work. They're getting the government road projects. Those are the guys I would be looking at. Turnarounds in construction tend to be disappointing. They tend to end up with a value of zero. And that's the thing. We've seen that. There was a time the construction sector was 13 companies, and they were big. Yeah. I mean, between Murray's, Avenge, and Group 5, it was 100 billion rand in market cap. Now it's just those two, and they're nowhere near there. Like David says, it's too complicated to find a winner in a turnaround and in a restructure.
Yeah, and ultimately construction, much like computer supplies, it's become a commodity. I mean, there's 100 companies who can build a bridge or a road. Roy, staying with you, question coming. FirstRand, should we be worried about the UK potential fine? Because this is my preferred South African bank. There is that potential fine. They're appealing, but as I recall, they've provisioned it. So it's kind of moot in a sense, maybe.
The fine is actually small in their lives. The biggest question is what they do with Alderman overall, because that's the one business they have in the UK. It's small. It's not as dominant or as preeminent as FirstRand is here. So that's the question. Outside of Aldermore, I think FirstRand is a fantastic business. It does trade at a premium, but for a reason. They've got high returns relative to everybody else, and they've got some very solid franchises between West Bank and all the other businesses they have. So, long story short, I don't think that fine is a game changer entirely. They've provisioned for it, and however big it gets, it will not be big in the bigger picture of the FirstRand group.
Yeah, 3 billion, a lot for you and David, but not for banks.
Simon, there was an announcement earlier today, that they continue, they're getting back to business now. They're going to disclose what they paid to the dealers, I think, which is what the judge called was illegal. And I think the whole question about whether you can do that was also questioned. But, it isn't big in their lives. It's more reputational than anything else. And I think there are a lot of other banks in the UK who had much bigger exposure and bigger businesses, who are affected. But I don't think it's, in fact, even when it was announced, I think the market just barely brushed it aside.
Last question coming through, British American Tobacco. David, talk around dying industries. Nice yield in sterling, but I don't know. No, you're shaking your head. People don't smoke anymore, besides one or two. But generally, it's a dying industry. And I think even if you looked at their numbers, yes, I think in some of the emerging markets in certain other countries where they still smoke. But this is an industry which for the last decade, 3 decades, has been under pressure as authorities clamp down on smoking. And they're going to get to all the other products as well. You can put a very strong case around it for it generates cash, it gives good dividends, but it's literally a dying industry, I suppose, Roy, maybe that's it. Best case, we can say it's ex-growth with nice dividend. Would BTI be on your list?
Look, it's a place to hide. If you're in South Africa, you're looking for diversification, solid yield. They're going to decline slowly over time, and maybe vaping might save them or something and all of that. But like David, there's growth opportunities. There's companies out there at that multiple that can give you growth elsewhere. As a diversifier, maybe, but no, that's not the industry you're looking for.
Yeah, I take the point. You want growth. That's why you're buying equity, because you want that growth. Let's go to stock picks. We've got some minutes left. Roy, Altron.
Yes, so Altron's a fantastic business from the perspective that David said most of it. I'll just add that they've transformed into a platform business, and on that platform, they're getting a lot more annuity revenue. So they're more guaranteed in terms of the revenue they make rather than selling widgets and selling drop-in boxes. And it's a management team that's proven their credibility. They've given themselves a nice target of getting over R1 billion in bottom line earnings. And you can see from their guidance and their execution that they're heading nicely there. So wider margins, more reliable turnover at a very relatively low multiple compared to their peers. I think that's one that you back over the medium term.
Yeah, Altron. And certainly, as you said, they've become tech. They used to be equipment and machinery. David, you're going with Novo Nordisk.
They came out with their numbers this morning. Last week we had Eli Lilly's numbers out in the US, where there was a bit of a splutter in terms of the sale of their GLP, these blocking drugs, which are used in obesity and, of course, in diabetes. But Novo Nordisk came out with superb numbers now, extending their sales of those products. These are super drugs. One mustn't discount it. There's a lot of talk about competition coming in, but the two companies are, Eli Lilly and Novo Nordisk, huge businesses as well. And the sales that came through today are very encouraging. I see the shares are up 9%, which is a big relief for me, because every other stock that I've chosen in Europe has gone the other way. So,
but David,
it's more my relief.
Is it Eli versus Novo, or is it frankly a bit of both in a portfolio?
They both. They complement each other, and that they've been going at each other's throats in a friendly way for about 100 years on diabetes. But I think what happens, one comes out with a drug which encourages the other to kind of match it, that kind of competition and that. But I think both very good. I would put both in. I would put both companies in.
That's it for tonight's Stock Watch. Thanks to our guest, David Shapiro, Sasfin Securities, going with Novo Nordisk. Mutooni from Sanlam Investments, going with Altron. Up next, The Close. Stay tuned. you.